We are Hiregange Academy, wherein we are raising a set of videos on the intricacies which are there in GST. And considering that the videos need not be too elaborate and too detailed, we have made simple PPTs. This PPT is on the e-invoice and e-way bill, which impacts the retail trade. And although it has a few more slides, we'll try and complete it within a shorter period of time. First and foremost, getting into the topic, we have the concept of e-invoice and e-way bill, why it has come into GST. The simple reason is to maintain track, to ensure the parallel economy, which is the economy which is not paying tax on the transactions in India, to ensure there's a curb on that parallel economy, and to keep a track on the actual transactions which are taking place. Although this is leading to some burden on the tax compliant, we will be discussing what are the requirements and the compliances which are required presently under the law. E-way bill, if you know, has now been linked to FASTag and also the Vahan registrations. RFID tags have been put on majority of the vehicles. This ensures that the government has a lot of information. Although the number of notices are increasing, I feel that maybe only a small percentage, it's like a drop in the ocean, wherein the government and the departments are still yet to analyze the data completely, which may be giving out certain drastic or very eye-opening results. We would have to wait and see. The compliance in relation to e-invoice and the e-way bill, this requires a very high state of readiness, very high state of compliance, and no exposure to making errors. So this requires a huge setup by the entities, the taxpayers. But on the other end, there has been a lack of training for the departmental officers who are creating certain nuisances. We can see in the High Court orders, various High Court orders, wherein they have quashed these e-way bill related issues, wherein it has been confiscated or high penalties have been imposed for, say, very insignificant errors. The law is changing on the regular basis, but whether this law is being updated by these officers and also the GST department is very unclear. Lack of infrastructure at the taxpayers' end is a major difficulty which is being faced. This is not only for the small people, even in the MSMEs also are facing these issues. The persons who are able to satisfy the compliance presently are those entities which are 1,000 crore and plus. So keeping in mind that that may be only a very, very small percentage of the tax paying assessees in India, I feel this needs to be revisited by the government at a very drastic speed. Litigation in relation to these e-way bill issues have to be performed at those respective states, which means that a person who is not there in those respective states will have to go to such state and dispute the case if he has to. This is not the way the law needs to be addressed, but this has become a reality due to our federal structure in India. So this introduction of e-way bill, e-invoice, although is having a good intention, it is resulting in discomfort for the taxpayers. It is resulting in significant cost for the assessees and even cost to the government in ensuring such compliances. So just to give a brief gist of the compliances which are applicable for retail trader of goods. Now assume that your turnover is more than 10 crores per annum. So for the e-invoice has been made mandatory for those persons having more than 10 crores per annum from 1st October 2022. E-invoice is now mandatory only for tax invoices, which means it is there specifically, not there specifically for exempt supplies, and there are of course certain exemptions which are provided in the notification. Real-time e-invoice is required because retail traders are performing their supplies on a real-time basis. Credit note, debit note, and tax invoice for B2B and SEZ supplies are required under e-invoice, although other tax invoices, that is B2C supplies, do not require a e-invoice. Bill of supply does not require an e-invoice. If your entity is 500 crore plus, then you would require additionally a dynamic QR code, which is different from the QR code on the e-invoice. E-way bill compliance against movement of goods is mandatory. Delivery challan wherever goods are moving for other than the purpose of supply. The GST returns which are required to be filed is GST are 1 and 3B on a monthly basis, 9 and 9C on an annual basis. ITC reconciliation GSTR 2B versus books, wherein credit can be claimed only based on entries in GSTR 2B, is applicable from April 2022. So keeping in mind all these compliances which are on a very higher level, which I was speaking about, the nitty-gritties in each of these compliances may be even more. But this is the basic level of compliance that each person who is more than 10 crores may be looking. Coming to e-invoice in retail trade, invoice must be presented immediately to customer on sale, which means there must be an integration with the billing software. E-invoice which are raised manually after generating a normal invoice will create an issue for the customer wherein he may not be able to take the credit. Indigenous billing softwares which are being used, and where there are separate operational and billing and accounting softwares which are being used, which are not integrated. These are the reasons which are not allowing that entity or that assessee to be able to do real-time e-invoicing for the customers. Coming to classification, this is generally a very common issue wherein the classification is based on what the taxpayers or the retail traders, vendors have applied on their invoices. Generally, this would be appropriate, but it cannot be said to be applicable in all situations. Therefore, HSN classification, which is being performed, is a compliance burden of the supplier. In such situation, the HSN codes can be revalidated on the GST portal, where you can even see the HSN on a 6-digit level, and also you get the GST rates in a separate area. So you may need to visit the GST portal and the CBIC portal for the HSN and the GST rates. Please always re-verify, because we cannot shift the burden of tax compliance to our vendors. Some important points to note: e-invoice which is directly being uploaded in the GST portal cannot be saved in the GST portal. Therefore, you must maintain separate copies in your systems. If not, you can use third-party tools such as ClearTax, GST Easy. There are many in the GST in the online. All of them will have a internal storage tool of your e-invoices also. E-invoices cannot be modified after being raised. That means either it has to be cancelled within 24 hours, or you would have to correct only through debit notes and credit notes. Turnover limit, as we discussed, from 1st October for invoice, it has been reduced to 10 crores. It was 20 crores earlier. I expect that from April 2023 onwards, it would be reduced to 5 crores, and that will be maintained at a status quo, because they would not like to trouble the assessees who are less than 5 crores. So coming to software requirements, the software must be able to bifurcate B2C and B2B transactions. It must be able to bifurcate even the SEZ transactions, and in that the exempt and taxable transactions. To that extent, the e-invoice is applicable only for taxable B2B and SEZ transactions only. Exempt and taxable supplies in a single invoice to a B2B party is not allowed. The invoice come bill of supply option is allowed only for B2C supplies. Minimum 6-digit HSN availability must be there, which means the software, the system that you're using, must not allow 4-digit HSNs in your system. IR and QR code must be generated and displayed in the invoice. Supplies to SEZ must have an additional declaration as per Rule 46. E-invoice must be raised as per the time of supply provisions of Section 10 of IGST Act. Section 12 and 13 of CGST Act. Section 10 is in relation to the place of supply for the goods. This place of supply is very important for the purpose of identifying that the goods, if it is moving outside in your state, within the state, outside India, Accordingly, the CGST, SGST, IGST, or with or without tax options would arise. E-invoice must be maintained in the record books for 6 years from the GSTR 9 due date for that financial year. So what are the consequences of non-compliance? 10,000 rupees or tax evaded, whichever is higher. Customers' input tax credit can be questioned and denied, which means you would have difficulties with your customers, loss in your reputation and trust. The Alternatively, there is also an option wherein you can check if your vendors also are raising their GSTNs as per the IRN list which is being prepared in the e-invoice portal. Here, you would be able to verify whether your vendor is supposed to raise an e-invoice or not. But this may not be applicable in all cases because there are certain exemptions provided by way of notifications. So wherever your vendors are not raising e-invoice, please ensure you get a written declaration from them that the e-invoice is not applicable to avoid future disputes so that your credit is sacrosanct. So that brings us to the end of e-invoice under GST. Coming to e-way bill in retail trade. As all of you know, e-way bill is required for those consignment of value more than 50,000. The value must be considered inclusive of the taxes. There are certain exemptions for e-way bill. You have to go to Rule 138, sub Rule 14, wherein you will see all these various types of exemptions which are allowed against raising e-way bills. Whenever the movement is happening, the documents which are to be carried is invoice or delivery challan and the e-way bill which is linked to such invoice or delivery challan. Exemption from raising the e-way bill which are there very commonly seen are used personal household effects when they're moved through non-motorized conveyance, which means say cycle, bullock cart or any such things. Others of course can be seen specifically in the CGST rules. So coming to some issues and resolutions in the retail trade, in a situation where the person has come to the store and purchased certain goods worth more than 50,000 and it's taken by the customer who is unregistered, in these situations it is not required, e-way bill is not required. Where it is purchased at the store and a registered customer is taking these goods, in this situation either the supplier or the customer must raise the e-way bill against that invoice. This cannot be said to be used personal effect. Purchased at store and delivered to B2C customer. In this situation, because the delivery is happening against a supply by a registered person, in this situation, then these supplier may be required to raise the e-way bill. Please note the difference between the first and the third one is that when the customer who is an unregistered person takes the goods from the store, it is not known by the registered person being the supplier where these goods are going. Therefore, raising an e-way bill is not practically possible. Wherever goods are purchased, stored, and delivered to B2B customers, again that e-way bill would be required. Where it is purchased the store and delivered to another address, you can use the concept of transaction type bill to ship to option, where it is store is at one location and delivered from another location. Say the goods are not available in location one of the entity, but location two has the goods, and then it is shipped from there. Then the transaction type should be bill from, ship from. So they'll bill from location one, but ship from location two. So various permutation combinations are possible in the e-way bill portal, wherein you can choose the type of document, you can choose the type of transaction, and the distance is linked to the pin codes, and therefore ensure your pin codes are appropriate to ensure the distance and the number of days of validity of the invoice are appropriate as per your requirement. Wherever the combination where it's purchased at store one, delivered from store two, and then the shipping address also is different, then there's a concept of combination of 2 and 3 in the e-way bill portal. So this also is available. Exchange of old product for new product, wherever used personal household effects are there, it can be considered under that, or wherever it's less than 50,000, then of course e-way bill is not required. Wherever it's purchased and asked to deliver after a specified time limit, the supplier must raise the e-way bill against e-invoice upon actual delivery only. The general practice in the industry is when e-invoice is raised, automatically e-way bill also is raised irrespective of movement of goods. Please note, e-invoice is based on the time of supply of provisions. E-way bill is based on the movement of goods. So in this situation, e-way bill can be raised at a later point in time after the e-invoice has been raised. So where the products have been asked to be delivered in 3 installments. So in this situation, supplier has to raise e-way bill against 3 separate delivery challans. All these delivery challans must have a link to the e-invoice, and the e-invoice must be raised before you raise any of these delivery challans. So the credit is eligible to the customer at the last installment only. So coming to some of the consequences of non-compliance of e-way bills. Now, against the exempt goods, it's lower of 2% of the value of goods or 25,000, which is there. Against taxable goods, if the owner comes forward and makes the payment, its penalty equal to 200% of tax payable. Please note this is a very high consequence of non-compliance which has been imposed. Although there have been representations to reduce this, the government does not seem to be looking at reducing this. Where the owner does not come forward to make the payment of tax, penalty equal to higher of 50% or the value of the goods or 200% of the tax payable on such goods. In addition to the penalty which we just discussed, there's also an additional 100% penalty, the option of detention, seizure, confiscation of these goods. Where the taxpayer is not responding, they may also auction and sell off the goods and the vehicle also. So to this extent, to appeal against the e-way bill issues, 25% pre-deposit is mandatory. In addition to this, there is also a requirement wherein a bank guarantee must be provided to release the goods and the conveyance. For the transporter only, 1 lakh needs to be paid to only get back the conveyance. Please note there's a circular number 64 which provides a list of various types of small insignificant errors, say typographical errors, which will attract only a very small penalty, which says 1,000 or 10,000 rupees at maximum, and not more than that will be charged. There would not be a requirement of bank guarantee or a pre-deposit or an appeal. So there are certain options which are provided, although practically these are not being followed by the departmental officers. So what is the outcome that we must be clear in relation to e-way bill compliance? We must ensure that our systems are clear and have all the required possibilities to raise on time, to raise in the correct manner as per the law, and our employees are trained in the correct manner to ensure that the e-way bills are not are all error free, and also the GST compliances are in place to the extent of e-invoice and e-way bills to avoid significant costs in the form of penalty and taxes. Also, to ensure that all your GST compliances are in place, please ensure your books of accounts are reviewed on a periodic basis by professionals. The solutions given by these professionals must be implementable in the practical business scenarios. So in relation to e-invoice and e-way bills, if you have any queries or clarifications, please reach out to me at my email ID, which is on your screen. I would like to thank you all for your time and your patience.